Hey everyone, this is Scott Grant with Standfast Asset Management, and we've been coming to you weekly with some investment classes or seminars online to share some of the knowledge that I've accumulated over decades as a professional investor. And why are we doing this? And the biggest reason is that people continuously have come up to me and say, Scott, we know you from the newspaper columns, we know you from the historical presentations, we know you from the radio show, but we'd like to know more about what you do as an investment advisor. And so today I'm going to talk about the difference between speculation and investment, or speculating and investments. The key difference is that an investment is typically something that pays you. A speculation is a situation that you enter into where you hope to buy something, and it could be a stock, it could be a house, it could be a horse, and you expect to buy it at one price and sell it for a higher price. And sometimes this concept is described as the greater fool theory. And think of it this way: there's some sort of an asset, maybe it's a stock, let's make it a stock because that's easy, and the stock is rising in price, and you think, wow, it's going up so much and it's really expensive, but I'm going to buy it, even though I might be foolish to buy it at this high price. And the expectation is that I'll find a bigger fool or a greater fool to buy it at an even higher price. And I've seen a lot of people lose a lot of money following that path. An investment, on the other hand, is something where typically you get paid for holding it. You know, a stock, let's say like Johnson & Johnson, that pays a dividend of 2.7%. You buy that stock, you plan on holding it for a long period of time, and you expect to get that dividend every year, every quarter really, for a long period of time. And in fact, you may even expect that that dividend is going to go up. Now, there's no guarantee that Johnson & Johnson will continue paying a dividend or that that dividend will continue to increase. But as an investor, that's what we're expecting. I mean, that's why we go into the stock to begin with. And during the promo, I talked some about a cube of gold. And in my example, I said, what if you had a cube of gold that was 1 foot by 1 foot by 1 foot, or a cubic foot of gold? There's a couple things about this cubic foot of gold. Imagine this is a little bit bigger. This is a cube of gold. First off, it's worth $21 million. And secondly, it weighs 1,200 pounds. So suppose, for whatever reason, you found yourself in possession of a cubic foot of gold worth $21 million. First, let me tell you, congratulations, $21 million, it's a lot of money. And you're probably set for life. But what do you do? And let's just say this is the only asset that you have. Now, you could polish it, you could hug it and tell it how much you loved it. And there'd be a lot of reasons to love $21 million worth of gold. But to live, what you can't do is you can't eat it. And you can't live inside of it. I guess you could try and construct a house out of your gold, but it's not that much gold to build a house. You can't live in it, you can't eat it. So what are you going to do? Well, almost immediately you're going to begin shaving off pieces of your gold and selling that gold to live. And in the promo I pointed out, one of the first things you're going to want to buy is a forklift, because you cannot lift your 1,200 pound block of gold and move it around by yourself. Second thing you're probably going to want to buy is some kind of like a pickup truck with a 1,200 pound plus payload, so you can drive your gold around. And then the third thing you're probably going to want to buy is some sort of a house with a pretty intense security system, so that you can protect your $21 million worth of gold. And each time you do that, you're going to shave some of the gold off. And think about that as sort of a way to live. You can live off this cube of gold, $21 million, probably for the rest of your life. but you're going to be constantly and consistently whittling off pieces of your gold in order to live. Now, all the gold in the world is just about enough gold to fill an Olympic-sized swimming pool. It's worth about $10 trillion. Nobody's ever cornered the gold market. Nobody's ever tried. On two separate occasions, individuals did attempt to corner the silver market. Jay Gould in the 1880s and the Bass brothers in the 1980s. Both failed miserably and lost a lot of money. But people have attempted to buy not all the silver in the world, but such a substantial portion of the silver that they would be able to control the price, and they would buy it and the price would go up and they would make a fortune. It didn't work. But name it, $10 trillion total value of gold in the world. If you had $10 trillion, you could at least attempt to buy up all the gold. And there's some well, there aren't any trillionaires out there, but there's some billionaires, and none of them have tried. In any event, the gold is a diminishing asset. Now, what you do with this gold is you could sell it. Just sell the whole thing. I mean, $21 million, stick it in the bank and live off of it that way. Or you could take your $21 million and you could buy yourself 140,000 shares of Johnson & Johnson. I wouldn't recommend this. If anybody out there has $21 million they want to invest, I would tell them to diversify. Don't put all your eggs in one basket, but you could buy 140,000 shares of Johnson & Johnson, and Johnson & Johnson pays a 2.7% yield, which means that the stock would pay you $565,000 a year. And probably, and there's no guarantee, but probably that dividend would go up over time. Now, could you live off of $565,000? I think probably for most of us the answer is yes. So where the gold is being slowly whittled away, hopefully our stock market investments are not only growing, but paying us an income that we can live off. Now, one other example before I sign off. One of those things I often say about the difference between speculating and investing, I use a real estate example goes like this. If you and I decided we wanted to invest in real estate and we went out and we bought a strip mall or an 8-unit apartment complex and we collected the rents for a long period of time, that would be investing. Alternatively, if you and I went out and bought a house, say here in Ponte Vedra, and we said, hey, you know, we're going to paint it, we're going to make it, update everything, and we're going to flip it and make a profit. Now, we might make a profit, but by definition, what we're doing there is speculating. We're buying an asset in the expectation that we can sell that asset at a higher price to somebody else. And what's important, the distinction here is that's the only way we're going to make money. We're not going to rent the house. We're not going to collect anything from the house. The house isn't going to pay us while we hold it. In fact, it's probably going to cost us while we hold it, which is why we want to flip it as soon as we can. But the only way to make money is from the increase in value. We can often live through periods of market fluctuation and decline, and stocks do go down because we're getting the income. And that's our ideal, is to get the income. So, having said all that, I want to hit some disclaimers here. First off, the biggest one, stocks and stock market investing have risk. People can and do lose money. The same is true of investing in gold. People can make money, but they can also lose money. Additionally, I need to inform you that I personally own shares of Johnson. My family owns shares of Johnson. Our clients who trust us at Standfast to make wise investments for them, they also own Johnson & Johnson. Frankly, I own a lot of Johnson & Johnson stock. We may buy or sell Johnson & Johnson stock tomorrow or at any time in the foreseeable future without giving you notice. Hopefully you'll like today's seminar And hopefully you'll follow us on Facebook and YouTube as we continue to explore investing over the next 6 or 7 weeks. Thanks for tuning in, and let us know what you think.